The US dollar is losing its main character moment, and banks and experts and investors are worried that the US dollar may potentially crumble. But is that really likely? What do all these jargon terms mean? And what do you need to do as the everyday person to make sure that your money is okay? Today, I'll be breaking down everything you need to know, and I promise you it is not confusing, it is not hard to understand, it is actually very, very simple. Up till now, the US dollar has kind of been like the queen bee of all currencies around the world. It is seen as the top currency, the most reliable currency, and most of the world reserve banks hold US dollars in the same way that we would hold gold or some sort of precious metal, because they believe that it is something that does not fluctuate too much. As a result, it's been the world's primary reserve currency. And the way that I like to remember it is reserve bank, reserve currency. It's what is reserved as the most special and most safest and most universally used currency up till now. Up till now, the US dollar has kind of been like the queen bee of all the currencies, like the euro and the pound and like the Australian New Zealand dollars. They've all kind of been like, hey USD, we love you. They've like, if the USD turned up and was wearing a really ugly outfit, NZD would still be like, I feel like this is really in, and this is really, really cool. Like, we've kind of been sucking up to the US dollar because it is the universal reserve currency. And that's another jargon term, which again, like sounds really confusing, but in super simple language, all it means is it's seen as like the top currency that every country sort of recognizes as, oh, we all are going to use this. And so most reserve banks in most countries hold a bit of US dollar just as a way of making sure that they have some assets in cash that are, so to speak, stable. And so if that doesn't really make sense, another example you can think of is that the reserve currency internationally is seen as a currency that people across different countries and different businesses use for trade. So for example, if I owned a company in New Zealand that exported milk into Japan, I can assume that I'm going to be trading that in US dollars rather than NZ dollars versus Japanese yen, because the currency fluctuations can be kind of frustrating, and you might sometimes be selling more or selling less depending on the price fluctuations. So that's never fun. And the US dollar ended up becoming the reserve currency after World War II, when the US kind of came on top as this big economic powerhouse and was kind of seen as the leader of, the free world, so to speak. Quotation marks are definitely being used here. But now there is this movement of perhaps de-dollarization, and that's another jargon word, which I promise is actually not that confusing. De-dollarization just means we are moving away, perhaps, from using the US dollar all the time for everything. It's saying, hey, we've always used this currency, USD has been so popular, but are there other currencies or things that we can put our money into that replace our dependency on the US dollar? Basically, other countries are saying, hey, US dollar, do not get too comfortable, you could be de-dollarized. On the other hand, there's another jargon term called the dollar apocalypse, which is probably a little bit more dramatic than it needs to be. But in simple terms, the dollar apocalypse is this theory that perhaps the US dollar could be worth absolutely nothing or be extremely devalued. And the reason why it's coming up is we're seeing very high inflation, national debt in the US is getting out of control, and there's some very strong geopolitical risks and issues that don't seem to be getting any smaller. And so you might be wondering, well, Sam, why all of a sudden is the US dollar weak? And for so long, it's kind of been seen as this very impressive thing. It's been very stable, and I don't really understand what's so different right now. And I guess you could say it's perhaps the perfect storm. There's a number of reasons why the dollar apocalypse may happen. One is, of course, inflation. Unsurprisingly, inflation is getting very, very high. What you can buy for $1 is getting smaller and smaller, and it's getting to a point where you might start to wonder, well, are we going to fall into an area of hyperinflation where inflation becomes so out of control that the value of the dollar is almost worth not a lot at all? Another reason is that the US has huge national debt, and this seems to be growing larger and larger year on year, which causes a lot of everyday people and investors to wonder, who's going to pay off the debt? Like, who's going to write it off? Who are the write-off people here? Because it's starting to seem a little bit harder and harder to understand how this could be paid off. And therefore, the fear of de-dollarization and the fear of the dollar apocalypse becomes a little bit more real. And then on top of that, to make matters worse, there is definitely a global shift or movement towards looking at alternative currencies. So, for example, China and Russia have been actively trying to dethrone the dollar. They're trying to kick that dollar off. And there's even been talks of replacing it completely with the gold standard again. And then kind of woven into that is both geopolitical tensions. We are seeing war. We are seeing upheaval. We are seeing a lot of hyper negative situations that can absolutely cause the economy and therefore the dollar to start crumbling. And then we have internal issues within certain countries, like the US in particular, where economic policies have caused the dollar to get devalued because we've been printing out lots of money, and therefore that has caused inflation to continue to rise. And while all these things are not going to cause the US dollar like next week to drop to zero, it is a possible slow and steady decline. And it's kind of like saying, hey, look, the US dollar is not being dumped, but it's starting to get a little bit dodged. The phone calls to the US dollar are starting to not get picked up. The US dollar is like, hey, are my friends all mad at me right now, or am I just making it up and it's headed? It's more of a slower, steadier decrease. However, in saying that, this isn't necessarily the first time that we have seen the risk of the US dollar drop. In fact, you could probably look very recently at 2008 when the GFC happened, and we saw the dollar drop significantly where the value was just not the same, and it took many, many years to recover. And when you look overseas to countries like Venezuela or Zimbabwe, their currency dropped significantly and very suddenly without any warning. However, from a personal perspective, I don't think we're comparing the same things here. We're really comparing apples and oranges, which, by the way, I learned was a saying that meant we're not comparing the same thing. I used to think that saying we're comparing apples and oranges meant we're comparing the same thing. It's not a big deal. But essentially, the Zimbabwe economy, the GDP of Zimbabwe, the GDP of Venezuela, these are not comparable to, the huge powerhouse that the American economy is and the US dollar is. So I really doubt that we're going to see a sudden dollar apocalypse in, a couple of weeks or months. It's highly, highly unlikely. And in fact, there's also been some theories that maybe the US is purposely devaluing its dollar, and maybe this is a good thing for the US in the short term and possibly the long term. I can almost see why they think this, and so let me explain it for you. If you've got the US dollar, and let's say 50 US dollars is the exact same as 50 pounds, if you are a US manufacturer, if you devalue the dollar, suddenly things that are from the US exports become cheaper for overseas buyers and companies to purchase. And so it makes the US a much more attractive place for people to manufacture goods and services rather than using more traditional countries like China or Taiwan. It's basically saying, hey, we want to increase manufacturing. And look, we're actually a cheap place to manufacture. We're no longer a very expensive place. So rather than, 50 pounds equaling $50, let's say, suddenly your 50 pounds is worth 80 US dollars because the US dollar devalued, and you can buy more goods and services and have them exported over. And so in a way, possibly it's seen as a play to improve the US economy by increasing more work, increasing the GDP, and also just causing more manufacturing to happen in-house, so to speak. So you might be listening to this and going, okay, Sim, fair enough. There's a lot of factors that might be causing the US dollar to drop. And I understand that it's not going to suddenly disappear overnight, but it sounds like other people in other countries are starting to diversify their dependence on the US dollar and possibly look into other currencies. And what does this mean for me? What do I need to do? What do I need to do to protect myself? What should I be looking out for? And that's a very fair enough question. And I think the best place to start is to be informed and to make proactive steps with your finances so that you are very well prepared if anything was to happen. And honestly, the worst case scenario is that the wealth that is concentrated in the USD or the reserves is essentially going to be moved elsewhere. It's not going to go to zilch and be worth nothing. We're going to see a transfer to other currencies and other commodities. So for example, perhaps the value of gold or silver or other currencies goes up because people are divesting from the US. As a result, we need to do two things. We need to have a solid emergency fund and have a diverse portfolio. It does not make sense to not have 3 to 6 months of living expenses saved up, and it absolutely does not make sense to have everything you own and everything that you have in the future to be worth just one currency. And the reason being is that a weaker dollar means more concern for foreign investors like myself. And we might start pulling money outside of the US market, and therefore there is less cash and less liquidity within the US market, which, let's be honest, is a very, very unlikely scenario, but maybe there's a small dent in this. This can also result in higher interest rates, and we don't like high interest rates because essentially that means that when you take out a loan, whether you're a business or a person, you are paying a lot more money than what you would have. Now suddenly it's harder for businesses to take on loans to buy more machinery, it's harder for everyday people to buy houses and cars, and this is never good for the economy. And if countries are ditching their dollars, they have to put that cash somewhere else. So they might be putting it in gold. They might be putting it in the yen. They might be putting it in euros. And so we're starting to see countries diversify their own portfolios. So it kind of makes sense that we as humans, as everyday people, do this as well. As a result, you might see some investors starting to look at putting more money into gold. You might start to see more people putting money into emerging markets by investing in emerging market funds. So for example, buying ETFs from countries like Taiwan or India, and basically saying, hey, we don't want to depend and put all of our eggs in one basket when we're looking at just the basket of different countries. So I guess the bottom line becomes, how do you invest in a world that's shifting, and where is the world shifting to? Well, there's two schools of thoughts. The first is a little bit more doom and gloom, and the second is probably something I believe in. For the first group, they believe diversify, diversify, diversify. They are putting their money in different markets. They are moving their money outside from the US dollar, and they're saying, hey, the real possibility of a dollar apocalypse could happen, so I want to put my money somewhere else. They're looking to invest their money in other assets like oil and copper and lithium, and some of them are possibly even looking at CBDCs, which is like a country's national version of its currency. In fact, China has been rolling this out a little bit more aggressively, and this could be due to what's going on with the US. The second group of investors, which is probably where I sit, have the belief that this is a temporary change. And yes, while the US dollar has got its ups and downs, this is a short-term concern. And in the long term, it will stay and keep its central role in the global financial system. And this is probably where my own thoughts are put in. So hear what I say with a bit of an asterisk. But I really doubt that right now there is a very strong contender to take on the US. Yes, there is definitely a desire and need to diversify, but I can't say with guarantee or certainty that there is one other currency or gold or commodity that does what the US dollar does at this point in time. And perhaps it is just a small term blip that we're seeing, a bit like the GFC, and eventually the currency will recover. But at the end of the day, it is anyone's guess. I mean, at one point, the British pound had global dominance, and we saw what happened there. So while we can say right now the US dollar remains strong, we can't guarantee that its dominance is going to remain forever. So I'd actually really like to know what you think. Is it going to change? Is it going to stay the same? Let me know in the comments below. And if you've enjoyed this video and want to improve your financial literacy, learn more about economic changes and how to invest, then check out my other videos. I'm so glad to have you here. Thank you again for your time, and I will see you next week.